Whereas we just saw that with a few days back, Coinbase just went down and they zeroed everyone's account balances. That was the run from 57 to 64, and Coinbase just shut down. And I remember, like, so I've been in crypto for a very long time. Like, I started accumulating back in 2015, 16. I've seen all the cycles, and I've written a crypto newsletter during those cycles. So I've seen all these shenanigans with the exchanges. I've seen all these bugs and problems with the exchanges. And typically, what happens is, if let's say you get a correction like that, and everyone's trying to exit, and there's like $7-8 billion worth of futures trades, perpetual futures trades, and then you have all these other traders who are trading on margin. Like, a lot of these exchanges, especially the offshore ones, they'll give you 50x leverage. And when you have all these participants just on one side of the trade, right? And you have an event where the exchange just crashes because of high volume, like we just saw, you will not be able to get out in time. Or let's say you have your Bitcoin in cold storage and you need to move it to the exchange to cash out. And then the block space is just full. How much ever you pay in transaction fees, you're not able to get through. So you're kind of stuck and you can't do anything with your Bitcoin because it's stuck in the mempool. And at the same time, like, the price is crashing. So what do? Like, so you have to plan your exit strategy well in advance when it comes to crypto, because it's not like, you just go onto interactive brokers and say, close all my positions. And then they just do it for you. Like, it doesn't work that way. But I think, like, everyone is just hyped up. Everyone's just waiting for it to go to 100K. There's a guy offering free call options. He's saying, I'll give you a 1:5 risk reward that, you pay me 20K if it goes to 100K. And if it doesn't, I'll pay you 100K. And it's like, that's kind of insanity. But you have these bets being offered. And it's just the kind of behavior that you see when euphoria is at its peak. And having lived through a similar cycle in 2017, I can tell you it does not end well for those who are buying pretty late.
I don't care how good you are in anything, you don't have discipline, you ain't nobody. Right. You're nothing without discipline. Because you give up under the slightest struggle without discipline. Discipline is doing what you hate to do, but do it like you love it.
Hey everybody, we're with Kashyap. So Kashyap is actually starting a newsletter. So Kashyap, what's your website again?
Hey, Jason. So my website is kashyapsriram.com. It's KASHYAPSRIRAM.com. So the launch is.
And I'll put something in the show notes for that as well. So Kashyap, me and him have been friends for a long time. We have covered a lot of topics from the shipping industry all the way through the commodity industry to Bitcoin. Kashyap's a great person to have on. He's a great person for you guys to follow because there's a lot of information there that's on the fundamental side that I really don't know like Kashyap does. So Kashyap's kind of my go-to source for that stuff, and that could be your go-to source as well. So I think it's really good. I'm really glad that he's starting this because I've been talking to him for years about it. I'm like, you got to start a newsletter. I'm so glad he's doing that. So glad you're with us today, Kashyap. So let's hop into it. So you have a couple things that you want to talk about today. And one was Bitcoin. So everybody, it's on everybody's mind right now. Bitcoin is hitting 66,000 today. Is that taking out the old highs?
Not yet. It's like old highs at 69. So, I mean, at this rate, it's probably a matter of days, right? Like, you never know. Like, certainly looks like that. The move from 50 to 60 was quick, and then it barely paused, and then it's at 66. And then you have all these guys calling for 100K Bitcoin on Twitter. It's like all the 2021 behavior, it's all back, right? Diamond hands, YOLO, gamma squeezers, call options. It certainly doesn't feel like we are living with 5.5% interest rates and you have banks failing. Like, you look out the window and it's a different world and you look at your screen and it's a completely different world, right? Like, kind of feel like, I mean, there's this disconnect, right? And we have had this disconnect for a while. So, I mean, can it last? Sure, but at this point, I would rather just say, enough is enough. Like, we had a good run. Let's just, end it, or at least start thinking about taking profits, because especially with crypto, it's not uncommon to see Bitcoin correct 25% in a day. Like, you've had those moves happen. And the problem with Bitcoin, unlike, your regular financial assets, is that, I mean, it's except for the GameStop scenario, you never had a situation where all your brokerage accounts went down at the same time, right? Whereas we just saw that with a few days back, Coinbase just went down and they zeroed everyone's account balances. That was the run from 57 to 64, and Coinbase just shut down. And I remember, like, so I've been in crypto for a very long time. Like, I started accumulating back in 2015, 16. I've seen all the cycles, and I've written a crypto newsletter during those cycles. So I've seen all these shenanigans with the exchanges. I've seen all these bugs and problems with the exchanges. And typically what happens is, if let's say you get a correction like that, and everyone's trying to exit, and there's like $7-8 billion worth of futures trades, perpetual futures trades, and then you have all these other traders who are trading on margin. Like, a lot of these exchanges, especially the offshore ones, they'll give you 50x leverage. And when you have all these participants just on one side of the trade, right, and you have an event where the exchange just crashes because of high volume, like we just saw, you will not be able to get out in time. Or let's say you have your Bitcoin in cold storage and you need to move it to the exchange to cash out. And then the block space is just full. How much ever you pay in transaction fees, you're not able to get through. So you're kind of stuck, and you can't do anything with your Bitcoin because it's stuck in the mempool. And at the same time, like, the price is crashing. So what do? Like, so you have to plan your exit strategy well in advance when it comes to crypto, because it's not like, you just go onto interactive brokers and say, close all my positions, and then they are like, they just do it for you. Like, it doesn't work that way. But I think, like, everyone is just hyped up. Everyone's just waiting for it to go to 100K. There's a guy offering free call options. He's saying, I'll give you a 1:5 risk reward, that, you pay me 20K if it goes to 100K. And if it doesn't, I'll pay you 100K. And it's like, that's kind of insanity. But you have these bets being offered. And it's like, it's just the kind of behavior that you see when euphoria is at its peak. And having lived through a similar cycle in 2017, I can tell you it does not end well for those who are buying pretty late. Like, Jason, you remember the cycle, right? When Bitcoin went from 14K to 20K in a matter of days, and then it crashed all the way back to 13K. And there were all these coins which are stuck in the mempool, and there was this big Chinese mining pool called Via BTC. So you didn't have a replace by fee option. And what you had to do was, you had to go to the mining pool and pay them a certain amount of Bitcoin, so they'll get your transaction through so you could exit. So, I mean, I'm just bringing all these things up because, I mean, it's not sexy to talk about these things because, like, no one cares, right? You're making money every day. You're just refreshing your screen and you're making money. And it's like, you have this euphoria. But the exit strategy has to be defined at this time, because if something goes wrong, then you're going to get stuck. And for a lot of people, they are losing wealth that they have built over a long time, right? So especially Bitcoin holders, they have been building through the cycles. And I would just hate to see everyone get hurt just because they didn't have a good exit strategy in place. It's no different from estate planning, right? I mean, if you don't do it, then you regret. I mean, you don't regret it, your family does, but it's kind of like that. So, and that's just something that I wanted to mention. Like, yeah, like, I mean, I can say, yay, price is going up, that's great and all that, but I don't think that's really going to add any value here. So, I mean, like, it's a boring topic, but I mean, I hope
No,
I've done.
honestly, that is like, honestly, that's why I'm here in the first place is there was so many people when I first started doing this. It was because, and this was before 2020, I started making these videos, making, a letter, making groups, basically because people thought trading was one way and it really wasn't. And then the COVID crash happened. And once again, everybody goes, "Oh my God, that was a great opportunity." But a lot of people just got killed during that time. A lot of people tried to buy, tried to sell, tried to trade it. Once again, if you magically bought it 40% down, great. And I'm talking about the stock market. Bitcoin went down even more than that. But if you bought it 10% down and you tried to, and then freaked out when it dropped another 10 and you sold and you tried to buy, like a lot of people got killed by doing that. Really, it's not about anything more than creating a strategy, like you said, an exit strategy. What's an exit strategy? So for me, like I'm long Bitcoin. I don't mind being long Bitcoin, but I also know where I'm getting out. I know I have a stop loss on. I'm also in, as Kashyap mentioned, if you're in cold storage, you're screwed. You cannot just get out very easily. But if I'm in futures, I can get out very easily. So I'm in the futures market. I have a stop loss. All my other Bitcoin, I understand where I'm getting out. I'm not going to exactly say all that, but if you have a situation like that, you basically just have to understand your entry and exit strategy. It's everything with trading is understanding your exit and entry strategy. For the COVID crash, I'll have people tell me, "Well, I bought 10% down. Who cares? I would have just held." And it's like, well, you could have just bought when it was 10% up, had a signal giving you a buy signal when it was 10% up from the bottom, instead of trying to guess at 10% down when it drops another 40, 10% up from the bottom. You've still like, and that's also because of the way the math works, it's also less than 10%. It's less than 30% down. So you're basically able to buy this dip on the way up, having a higher probability of actually having it go up. And you also don't know, this is the thing that people don't talk about. They don't know how they're going to react when some asset they're holding drops 80%. Like Bitcoin in 2020, or sorry, 2017, Kashyap and I were in that market. Like we understand these things. We've been in Bitcoin for a very long time. And so being in that market in 2017, watching the euphoria, seeing all of it, I had a friend actually tell me that he was going to kill me because I told him that Litecoin couldn't possibly hit the same number as Bitcoin because of the amount of coins and all types of crazy stuff was happening around that time. And then you see the market drop and everybody's like, "It's fine, it's fine, it's fine." It drops to 6K. It hovers around the 6K bottom forever. Everybody was fine. Nobody cared. Nobody sold really. Everybody, "Oh, I'm fine. I'll just add to it." When it dropped to 3K, everybody panicked out of it. That was it. That was their breaking point. I can't handle this anymore. And that's where the market bottomed for a very long time. And then once again, the same thing in COVID. Bitcoin's going up again. It hits that 13K zone that was in 2019, 2020, if I remember correctly. 2019. And then into 2020, it had another crash. It crashed back down to 3K. Everybody panicked once again. So it's understanding your strategy. It's not that you're going to catch those bottoms perfectly or those tops perfectly. You're just going to get out better and in better and catch the meat of the move, which if you're a trader, that's what you're trying to do. You're not trying to catch the tops or bottoms. So basically thinking about this move, you get a buy signal around that 20,000 zone. We didn't catch it right at the bottom. We didn't buy it. FTX didn't come up and we were buying right there. We weren't like, thinking about that. We were waiting to see that, hey, was that the washout period? Was that the actual bottom? And so no freaking out, no watching it just go sideways, no watching it go lower and getting out. Just got in it when it was moving back up, gave us a buy signal above 20. And it's still in our long-term account, it's never changed. It's been a long signal that whole time. And also right now, as I'm looking at the chart, if we had a pullback back down to 55, that would be an exit signal. So, once again, what Kashyap isn't saying is like, this can't go higher. Like he said, it'll probably hit all-time highs soon. he is telling you that there's a possibility, which there always is, and that's the first thing you have to think about. There's always a possibility of the market coming back against you. So you could just get out at that zone, get out at those zones. So no, I completely agree. I do not think it's boring. I think it's the most pertinent topic that needs to be talked about in trading way more often than it is. So I'm glad you brought that up.
Yeah, so like I remember the COVID crash, and that time I was working for a guy who knew quite a few of the OG Bitcoiners, and at that very bottom when it hit 3.5K, a lot of them sold, and they sold because they were so heavily exposed that they just couldn't take it anymore. They needed the money to pay their bills, and they thought this is it. Like, and the COVID crash was scary, right? It was like the world was going to end kind of crash, and they're like, this is it. I don't know what's going to happen. I need cash. I need dollars. And that was a very scary moment. And the reason you get to those scary moments is because you don't build cash during the good times, right? Like if you have built cash during the good times, then you can probably redeploy, you can probably wait it out, you have so many other options available. But like right now, the kind of euphoria I'm seeing, I'm pretty sure a lot of these guys, have forgotten the lessons of the past bear markets, and they are all in and buying calls and you know diamond hands and YOLO and those things. And I think that kind of behavior, when you see it in the market, it's definitely time to start thinking about how you would exit. If not, I mean, you don't have to exit right away, but at least you should be thinking about how you should exit. And so, yeah, I mean, that's my 2 cents.
No, I think that's good too. And even myself, like I'm not a marketer, I'm a trader. And I say that all the time because I don't like post things that are like, hyperbole, trying to get people to be more interested in something. Like, but once in a while I'll have somebody on the channel, Straza came on the channel and he was talking about Bitcoin hitting like 160,000. And once again, like I'm not saying it's impossible. Most of the time, if I am ever talking about targets, I'll be honest, it's to get people to be interested in it. But at the same time, I'm just betting because the trend is up. That's the number one thing I'm doing. I'm not really going, hey, like I'm going to wait till this hits 100K and I'm going to get out. I'm actually saying the trend is just up. I'm going to continue to be in it. And if you pay attention, if you subscribe to the channel, you also see that I get out of things as well. I get out of things. And also the other thing about trading is you're wrong. We had a guy in our group recently who had a conversation with me, and I was like, yeah, like he was like, where exactly how low can natural gas go? And this was a few months ago, and I was like, I have no idea. And he was so confused by me saying this. I was like, no, nobody knows. Nobody has any idea. It's that
In
funny quote in the Wolf
2014,
of
it
Wall
was
Street.
zero, right? In
Yes, yeah,
2014, it was just flat because it was worth a negative because the oil companies were paying environmental damages and fines just so that they could flat the gas out. Like you never know, you just never know where, especially with commodities. I mean, like we've seen negative oil prices, which is something I never thought I would see in my lifetime. And just happens, right? And if you're just going to focus on, oh, how low can it go? I'm just going to keep buying all the way down. Eventually, you're going to puke, right? That's just how it is. Like no one has a sticking power to just keep buying and holding. I mean, like the previous decade. I mean, after the dot-com burst, the S&P 500 had a 0% return for 12 years. Was someone really holding it for that entire duration, or same in the 60s, right? I think you had a 20-year period where you had absolute zero return. Is someone really going to stick to a buy and hold strategy thinking, how low can it go? I'm just going to keep buying if it goes lower. Like, no way. It's just that we are so used to the bull market that we think that this is an acceptable strategy.
yes, absolutely. And that's with everything. I mean, people are talking about like buying commodities on dips, and it's statistically like if you backtest that, it's a way to just lose a bunch of money. I continue to see these things over and over again in the market. It's the same way that I had a friend hit me up recently, and this is something that used to happen in 2017 all the time. Hey, Bitcoin's doing great. I'm gonna hold it. What do you think I should do with this? And he like 90% of the time if somebody's contacting me, they don't want me to tell them what they should really do. They want me to just confirm what they already want to do. So I'm trying my best to give good advice, but at the same time, I know this. And basically, the conversation came up. The only thing that would bother me is this is what he said. He said, the only thing that would bother me is that if Bitcoin dropped 40% and I didn't buy more, that's the only thing that would bother him. Now, once again, it's this strategy that people think. And if you look, like I have a long-term chart because we were just talking about Bitcoin up here, and yeah, you look at the dips and it looks like, oh yeah, you just buy the dips and you ride it and you're great. And I think that's what people think about trading is in general. And Kashyap's the person I've shared my returns with before, like I have great returns. I have some returns that are actually way above average, way above most hedge funds. And that is never one of the strategies that I've ever used. Like one of the strategies I've never used that type of a strategy for anything and any asset. Because basically, like if you're looking at it, you're trying to buy dips, you're guessing. There's people who are like, I'm dollar cost averaging. I've always thought that is the dumbest phrase I've ever heard in my life. Like, one, it's you have Paul Tudor Jones. He always has the saying. He has a big poster in his office. Well, he used to in the 80s. I don't know what he has now, but it was losers average losers. And I've
Oh
always
yeah.
thought it's a fantastic phrase because it's true, because if you continue to buy these losers, like there's no telling where exactly it'll go. And then by the time like you run out of money, like you might just panic. And it's just that, and also to add on what Kashyap said, Kashyap as he saw me short the oil market in 2020. So I was short that actual contract. I actually everybody talks about all the money that would have been made, and really like most of the brokers just said, I don't even know what this means, and just sent you on your way. So it really wasn't anything that was that crazy. Yes, it was a good trade, but it wasn't anything that was that crazy. Basically, it hit zero, and they said you're out. But if you look at those types of markets and you see that, how do you catch those types of moves? And really, for me, it's like understanding the trends. And like, because most of the time, the only people that are going to be in things like bonds go negative. Who's going to stay long bonds when bonds first went negative? Well, that's the trend follower. So yields are inverse to bond prices. So bonds, as they're moving up, yields are going down. So trend followers would do that. Same with oil, like oil's breaking down. Trend followers do that. And yes, we catch those huge moves, but at the same time, you have to understand the type of trader you are. Like if you're the type of trader that can handle that type of move, that type of volatility, those types of trends, that's great. You can be a trader like me, but also if you're not a person like that, you have to figure out what's right for you, but also above everything else, your exit strategy. Seeing the euphoria in the market, as Kashyap's saying, I'm seeing so I'm still long Bitcoin. I'm seeing a little less euphoria than I was seeing back then. But at the same time, Kashyap understands the intricacies of these markets. So once again, whether I'm right in being long Bitcoin, whether Kashyap's right and it stops here, the point above all else of an exit strategy, as boring as this sounds, like exit strategy, who wants to talk about it? It's kind of like you made the estate planning comparison, and that's the truth, because most people look at it like, oh, who cares? It's like talking about dying, like nobody wants to talk about it. But at the same time, it's like you cannot make money in these markets if you do not have an exit strategy. I'll do one more thing and I'll shut up. But there was an interesting one in the conversation where I was trying to explain to him after my friend mentioned the 40% down. And I was like, look, if I have this strategy, okay, I have this Bitcoin strategy, I'm making money. Let's say I catch the meat of the move from 20,000, I get out around 50,000, 55,000. Let's say it stops here and it goes to my stop. And then it drops all the way back to 20,000 again, let's say. Somehow magically it comes all the way back down. He would say I would have just kept buying the whole way down. And really, the way to do that is looking at me. I've had my trade. I've made my money. I'm already in a good trade. And so I'm not going to catch it when it hits 20,000. I'm going to catch it when it hits 25 or 30,000 for the most part. I'm going to make more money. However, what most people miss, what's the difference between a professional and a retail? So a professional understands that the drawdowns are the problem in your portfolio. So if I'm drawing down 80%, I've got to make a ton of money to get back to normal. A 50% drawdown even means you have to make 100% to get back to normal, get back to even, not normal, even. So basically, if you're able to understand that fact, then you understand the next fact, which is you don't want to ever continue to hang on to those drawdowns to that insane degree. This is why the exit strategy, whether you're bullish or bearish, it doesn't matter. You can have a trend signal saying you're moving up, and you can have an exit signal saying this is where I'm getting out. You always have to know where you're getting out before you're getting in. It's the only way to trade.
And the other difference I would say between the professionals and the retail is that if you're a professional and you have a 10-15% drawdown, right? You don't address it, you get redeemed. So you're kind of forced to control your drawdowns when you're in that world. Whereas if you're retail, you would be like, yeah, diamond hands. I know other people who have done it.
Diamond hands.
Yeah. And this is also something that I think the professionals as well, right? I think this is something that they have learned since 2008. So I remember reading about all these Lehman traders, especially I think the Wall Street 2 movie, it captured it, right? Like you get your bonus and you buy more Lehman shares. So now we are exposed to Lehman in two ways. Like it fails, you get fired and your options go to zero. And all the money you have, pumped into the stock from your bonus, that goes to zero. And people were just so leveraged because they really believed in Lehman. Like every Lehman trader actually believed in Lehman, and so they did that strategy. And if you look at Bitcoin, I think it's kind of the similar way, right? Like you have the cult, like people say it's going to go up forever, it's going to replace the dollar, it's going to replace gold and all that. And so in their professional lives, some way or the other, they are working for a Bitcoin company. In their salary, they're getting paid in Bitcoin. And whereas their life savings, it's in Bitcoin. And you have one thing go wrong, then it starts a spiral. And people just don't get that risk, right? And it's the same with tech. Like if you are a tech executive and you are having stock options in your company and your portfolio is if your portfolio is S&P 500, then your portfolio is basically tech, right? Like it's at least 30-35% tech now. So you take this kind of concentrated risk, you actually wouldn't consider it as a concentrated risk, right? Because it doesn't hit you that way. Like you don't look at your income, your 401k and your stock options, your restricted stock options as part of an overall life strategy or something. But in reality, that's how it works. Like you get laid off, probably the company is in trouble, the options go to zero, the market tanks at the same time. And if you are in 60-40, 60-40 is going to get hit the same as stocks, right? Like everything is correlated, everything goes to one. And then what happens? And in good times, no one wants to think through all this. But having lived through cycles, I kind of experienced the flip side of it. And so I think through all this, and I think it's something that's important to talk about because I'm pretty sure almost no one does, right? Like I remember the 2021 bull market. So you brought this thing about the exit strategy, right? I remember 2021 bull market. I was talking to a guy, he had made an insane amount of money. Like I kind of understood his net worth before the bubble and net worth after the bubble and or during the bubble, let's say. And it was insane. Like he had
Which
easily
market are you talking about?
the 2021 crypto bull market. Like you had all these altcoins, especially April, May, like you had all these altcoins just going up 100% every day, right? Like at that time, and I asked him, what is his exit strategy? And I still can't forget his reply. And he's like, Kashyap, you're an analyst, you're not an investment banker. Only investment bankers talk about exit strategy. And I was, what? Like, that makes no sense. It's like, that's the way they get their fees, like by talking about an exit strategy. And I was like, this thing makes absolute no sense. And that just stuck with me. Like when you have a environment where it's so easy to make money, right? I mean, whether you're long Bitcoin or you're long stocks, you're long whatever it is, you're long call options, you're making money every day. But it's exactly at these times that you have to pay attention to the exit strategy. And I'm pretty sure a lot of people who are in these trades will have no clue of that strategy or what that would look like.
Most people
So
don't. It's not generally important to most people. And like that's a really sad thing, but it's the truth. So like he said, like, oh, you're whether like you're a trader, you have an exit strategy. Warren Buffett, there's actually an interesting book called Trade Like Warren Buffett. Like he definitely has a lot of exit strategies. Um, Whether it's fundamental, technical, whatever it is, everybody who's a professional has a stopping point. And to be ignorant about it and think that you just don't need one because you're in retail, that's insane. Because really, like, you have to think of it like real money. I think that's the thing that really kind of shifted in my brain years ago. Thinking about all the money in my account like real money every day. Some people look at it and they're like, that's play money. That's money that I can do whatever with, and I don't really care if I lose it. And like it's going to like 30, $40,000 or 100,000 or 200,000. Like you don't think that's life-changing money? And also the only time they talk about that is when it's in a drawdown. They would never say that when it's up. I have $100,000, I have 200,000. They would talk about it every single day. But when it's down, oh yeah, I can leave it or take it or leave it. I had a friend who was invested in General Electric for years, GE. And it was during that whole period where it just kept crashing down. It was actually a family member. It's crashing over and over and over again. It's not going anywhere, like, and he would have these conversations with me and I'd be like, look, dude, I don't know when it's gonna come back, but just get out. Like you can just get out. Well, I don't know. You talk about this all. I don't know if I can just get out right now. I don't think I should. And he'd give me 50 other reasons and be like, well, why are you asking me? Like, just do whatever you're gonna do then. So it's generally the idea of being like thinking of yourself like a professional. Like I always tell people, think of yourself like a hedge fund. Like hedge funds have multiple strategies. I have something like, okay, I have some real estate, I have some commercial real estate, I have some gold and silver. That's all outside of the market. And then I have, my savings for my 1 year. Then I have my retirement account, then I have a long-term account, then I have a trading account. So I keep my trading account, my hardcore trading account, separate from everything else. And so you have to really have all those things in place to really do this at a high level. But also, like, if you're just starting and you just have like $1,000 and you're just starting to trade, like, treat it like it's real money. Don't just go. I see this all the time, and it's like, it's so frustrating. It's like hard to watch, but you see it all the time where you see people go, okay, I have $1,000. So I'm going to put everything on call options and hopefully I make $30,000 in a week. And 99% of the time, I don't know anybody who's done that. Like nobody usually makes money like that. They usually blow up, they lose it, and they go, well, I'll put another 1,000 in and play the game over again. And it's like, treat it all like real money, understand entries and exits. If you don't have an exit, like for example, in the group we were in, the coolest thing that anybody ever said to me was talking about if you don't understand how a trade worked and you made money, it doesn't mean shit. And it's true. Like you could be in all these trades and you can figure out how, like, you could make money on a trade, and it doesn't mean a fucking thing if you can't do it again. Are you a trader or like, and not to mention the other thing. So we're talking about all these things right now. The last thing would be, don't let a trade turn into an investment. Meaning I have this idea, I'm trading Bitcoin. It's at $20,000. Great. It's moved, it's giving me this buy signal. But now when it crashes, I'm just gonna hang on. Like now it's 66,000. Let's say it goes to 40,000. I'm just gonna add more because it's an investment now. I think Bitcoin's going to $1 million in a couple years. Like, don't let a trade become an investment. That's probably one of the top things that was ever taught to me that really helped me. Because really, like, your goal isn't to ride drawdowns and hopefully Bitcoin hits this crazy point. If your goal is to trade it, you need to get out and understand when to get out.
It's like GameStop, right? Like if you could see the gamma squeeze coming, let's say you got it at $4 and your exit strategy said, okay, this is going crazy. Let me just exit at 40 or 50 because the stock was getting halted all the time. And you had the exchanges, I mean, not the exchanges, sorry, the brokers were kind of restricting you. And so you're like, okay, I don't want to not have an exit strategy. Let me just get out. And then it goes to 400. And it's like you miss out, right? Like there's no harm in missing out. You had a great trade, you made a good return. What more do you need? Like you don't have to really think about it all day, every day, right? Like you made a great trade, you made money. That's it. Now you move on to the next trade. Now the next trade might very well be the same trade that you got out of, and that's fine, right? That happens all the time. Like I have found that as a trader, I keep coming back to the same stocks over and over again. Like if I'm bullish on gold, then it's the same set of miners that I buy each cycle. Shipping is the same, and it makes sense because cycles change, but companies don't, right? So GE is not going to suddenly become a, I don't know, AI chip company, right?
Yeah.
They're probably going to make engines and they're going to make lighting systems or whatever. They're going to make nuclear plants. They're going to stick to doing what they're doing. And when industrials come back, GE will come back. And that's the name you'll look at, right? And if steel is coming back, you're probably going to look at US Steel and Nucor again. You're not going to go look at something different. And I think like a lot of people get hung up on Bitcoin because they're like, oh, I could have made so much more money if I had just stuck to it. Or, I mean, at least with Bitcoin is understandable, but then they pick some random coin and they're like, oh, I should have just stuck to it for, throughout the cycle. Like I would have made so much money. And that really doesn't help your trading or doesn't help your thinking, right? I mean, if you got out, it's because you thought it was a good trade. And at some point, like the longer you are in the market, the more things you're going to sell that go up. And that's simply a function of the fact that market goes up over time. So chances are you're going to sell things that go up a lot. And as long as you have a system for buying it back, right? I think that works. So for me, like um, the way I look at it is like, I know you have your price signals, but for me, what I've found is I look at something at a fundamental level. And if I like it, I like to buy a lot of it when there is no volatility. I don't like to, I mean, I used to be a value guy. I used to take pleasure in catching those falling knives, right? And then I kind of realized that you do that is just frustrating because every day you open your account and you see red, 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 and you keep buying and then you keep waiting and then you see green. But overall it's emotionally taxing. Like sure, you may have the highest open gain on any stock because you bought it close to the bottom or you just kept dollar cost averaging in, but it's murder for your IRR because a strategy like that, if you look at the overall portfolio return, doesn't do well. So like what I found works for me is I like something, I buy it when there is like zero interest, zero volatility, and preferably after it has, killed investors over a part of the cycle. Like oil, today is kind of like that. Like except for if you bought oil, like I think after the second half of 2014, all the way to the start of 2022, anytime you bought oil or oil related stocks, you absolutely got killed because every rally just ended. Like somehow or the other, it just ended. And everyone was caught feeling miserable. Or same with gold. Like anyone who bought gold from 2013 to the second half of 2016, they all lost money. Anyone who bought 2017, 18 until the beginning of 2019, they all lost money. So you have these markets where people just got killed. And then you have these periods where like nothing much is happening, but the fundamentals are good. Let's say these companies are putting out good free cash flow, but there's no volatility because there's no interest in those stocks. That time it's easier to take a bigger position because then you know exactly where you can set your stop loss, and your stop loss will be very tight because the volatility is very low. And at that time you take those big positions. And that's the thing with taking big positions, right? I mean, I like the idea of taking big positions, but not the way like, okay, so I'm just going to put 100% of my money into this because it's trending right now. And
with leverage.
yeah, with leverage, like that doesn't work. But you can take big positions if you have very little volatility, because then you know if something goes wrong, you get out a very small loss. And if you're right, then you just get the added leverage of for your entire account, right? Like let's say at a point like this, if you put 25-30% of your portfolio in the gold miners, they have all bottomed, they all started turning up. Like right now, volatility is somewhat high, but let's say the volatility was a little lower, then you can actually take those big positions because you've seen the bottom, you've seen the strength coming back, and
Then
like
your
that's the
stop
way
loss
I like.
becomes the same size as you would want it to protect your account.
Right. Yeah. So like that's why I like these low vol purchases, like buy during times of low volatility and sell during times of high volatility. Sure, it can go up a lot more, but I mean that kind of works for me. And I know we have like different styles.
It's
So
actually
like
similar in a way because it's the only extra added point would be the breakout part of that. Like so for me, I like the same thing. Dead sectors, low volatility, dead countries, whatever it is. Low volatility, then you can get in. For me, it's I'm gonna wait till the price action also comes in and tells me. Then the price action comes in and tells me it's time. And then you go into the position. So it's not really, it's just one step different, basically, you know. But at the same time, like I love the idea of trading things like that because low volatility always leads to high volatility. And then also, if you're an options trader, this is where we got our options trade the other month where we were bought call options in oil. You had the global situation happening. I shouldn't say any names because they take you off the algorithm if you do, but on the Substack, you guys can see us writing about it, but I wrote about basically the fact that there was a great opportunity to buy options that were extremely underpriced for the amount of news that could come out and just blow, oil up 10-20% in minutes, which it did. And then we got out of that trade, and that's a good trade. But once again, you have to understand volatility to understand options. And if you don't understand volatility, you can't trade the options. And also, you don't really want to trade options on a breakout. That also adds to the price. You're kind of seeing a bunch of people plow into it. So that kind of turns badly as well.
yeah, so I think what you're saying works when you're dealing with the bigger ETFs and the futures markets, like the bigger markets, right? So, but when I look at stocks, I kind of look at the small cap segment. So probably everything is under $50 billion. Most of it is in the billion to 10 range. And at that point, you don't really get too many breakouts. You're just going to see a lot of sideways moves, and at some point it just trends up, but with high volatility. So that's the one difference. But if like let's say you take something like the biotech ETF, right? Then I would do exactly what you said, which is wait for the breakout and then buy, because then it's simpler. And that works because you have a highly liquid ETF.
I don't know. I mean, it's the one thing you and I have kind of always disagreed on, which is the fact that I don't think that there's a difference there. Like, I think there's a difference if you looked at the charts, and I could show you there, like biotech would be one way of looking at it. But once again, it's like, let's take your strategy. So what Kashyap's talking about would be a simple let's look at Bollinger Bands, and we'll
Yeah.
end on this because I gotta go in a sec. But we'll look at Bollinger Bands, which are, you know, a low volatility. Basically, they measure volatility. So as the bands tighten up, you have lower volatility. So if we looked at that and we said, okay, well, a very small cap gold miner is completely low volatility. Basically, once the band squeezed so much, the second it hit the top band, it really wouldn't be that much higher than an entry. All the only thing that would change would be that you would have an entry point with some momentum behind it. So it wouldn't be like biotech, for example, you know, that's a lot higher than the absolute low. It would just be, hey, it's here, it's low volatility. I'm just waiting for a little move up, because the Bollinger Band strategy is different than other strategies. Also, the longer term portfolio, I really do have to run that in a different way because I'm looking for the moves to be massive. Like I'm looking for the moves to last years. I'm looking for the moves to last a long time. So I have to basically be more willing to wait for a huge base and a breakout rather than trying to get in earlier. Like the trading account's more like what we're talking about right now. You have Bollinger Bands, you have the breakout strategy. So I think this was great. Let's talk again and make a part 2, because I know you want to talk about, and I would love to talk about gold miners with you. So gold miners, commodities, and macro.
Sure. Yeah.
Right. Okay. So we'll go to part 2, and all right, Kashyap, let's make some on the schedule for this week, and we'll talk soon.
Sure, Jason. Thanks.